We're live from the NASDAQ in New York City. Well, earnings season picking up steam this week with results from Goldman Sachs and Bank of America due Tuesday. The reports following solid results from their Wall Street peers last week. But despite upbeat results from JPMorgan, Citigroup, and Wells Fargo on Friday, the bank's top executives are warning of potentially challenging times ahead. JPMorgan CEO Jamie Dimon said in the company's latest earnings call, quote, that this may be the most dangerous time the world has seen in decades as the bank continues to prepare for a broad range of outcomes. That was in the results. And also Citigroup CEO Jane Fraser saying that the recent macro headwinds have made a clear impact on investor sentiment. Let's talk about that. We want to bring in Ben Eisen. He's a reporter with the Wall Street Journal. Ben, it's good to see as the results here from many of the large banks that we've heard from so far are actually pretty solid. But comparing that to the tone and some of the messaging that we're hearing from Dimon and what we heard from Charlie Scharf and Jane Fraser, I guess what's your assessment so far of earnings this season and how banks are positioned given some of that gloom and doom outlook to some extent?
Well, I think what you're seeing is that a lot of the bank executives are sort of signaling that we're kind of at a crossroads at this point. You have consumer spending, which has continued to hold up. Consumers and businesses have been really healthier than pretty much anyone had expected, given all the interest rate increases that we've seen. But we're starting to see some of the kind of downside of higher rates pop up, which is that you have loan losses starting to rise, you have demand cooling for loans, you have just sort of some of the friction that comes from higher interest rates is kind of starting to hit us at this point. And to be fair, all of these executives have been sort of calling for a slowdown for some time now, and we haven't really seen that yet. But as we get further and further along into this kind of era of higher interest rates that we've seen, we are kind of seeing some of that slowdown come.
Well, yeah, and one of the other factors as well here that we had started to see rear its head is delinquencies, even on those loan payments as well. With all of that considered and what Jamie Dimon, JPMorgan CEO and chairman, had to say about consumers right now in tracking where they're spending down and some of the excess cash buffers they have starting to dwindle or diminish here even more so, what do you extrapolate from how much longer consumers can face this type of pressure?
It really remains to be seen. When you think back to the pandemic and all of the economic stimulus that the government handed out to consumers, it really gave a lot of people a very hefty cash cushion. And it's taken a lot longer than most anybody has expected for that to get spent down. Now, you are starting to see people spend down that money. And you have higher inflation, which is kind of causing everything to cost more. So it really, it kind of depends who you ask whether or not we are kind of getting to that point where those extra pandemic savings are getting depleted. But the further and further along we get from that period of time, the more those dwindle. It really only gets tougher from here.
Ben, headcount is another thing that many analysts are keeping a close eye on, not only when it comes to the big banks, but obviously many industries at large, but more specifically what we're hearing from banks so far. And I bring that up because PNC talked about the 4% reduction in their workforce and the cost savings that they are potentially going to see as a result of that. Is this a trend that you expect to see this season or maybe in the coming quarters among some of those smaller, more regional plays?
I think we're already starting to see some of the cutbacks that are taking place. You've got some of the big banks have been cutting their staff for a while now, for the last few quarters. And I think you probably will see headcount reductions being announced at a lot of the regional banks. PNC announced that they'd be cutting some staff on Friday. As these regional banks, which really are a lot more pressured than the big banks in this current period of time, they're going to be the ones that are going to have to take more drastic cost-cutting actions.
And when you think about going forward from here, we've focused on a lot of the regional bank and the turmoil, the sentiment that seems like it's in the rearview mirror to a certain extent, but maybe just because it's settled relative to the turmoil that we saw play out earlier this year. Do you expect any of these companies, especially in an era of perhaps cost discipline, as it's come up in one report, at least over the course of this earnings season, do you expect any of them to be thinking about further consolidation?
It's definitely something on people's minds. We haven't seen that much of it yet. But yes, we've had this banking crisis that took place in the spring, and maybe the acute phase of it is over. You don't necessarily have the kind of bank runs that we saw in March. But then you have these companies where their business model has really been very challenged by these higher interest rates, where they're paying more to hold on to deposits, and that really throws a wrench into their business model. So definitely banks that are too maybe perceived as too small to make it on their own are going to be looking around. Whether or not that picks up, or when that picks up, we'll have to wait and see. I mean, you have a lot of kind of factors that will play into that. We have new regulations, capital rules that have been proposed, and there's sort of regulators have a certain amount of skepticism towards certain consolidations in certain industries. So we'll have to wait and see how that all plays out. But it's definitely something that we would expect going forward.
Ben Eisen, Wall Street Journal reporter, joining us here today to not just talk about the banks that have reported, but preview some that are set to come here. Ben, appreciate the time.
Thank you.